Hi, ladies and gentlemen, this is Game of Trades, and this is going to be a technical analysis of natural gas. So in the last video that I made, I did talk about a potential break of this support level, and that is what happened. We did break this support level and come down to the next support level. I did talk about this being a similar consolidation pattern to what we saw here, and would actually most likely send us to the next either support level or resistance level. But my convictions weren't that high whether it was going to be up or down. It ended up being down. So if you did manage to trade this nice, I think it was 5% profit. Yeah, almost 5% profit on natural gas. So that would almost be 15% profit on UGAZ. So on DGAZ, I mean. So if you did manage to trade that, congratulations. And let's talk about what will happen in the near future. So one thing to get clear on natural gas is that we are not currently in a long-term trend. If you look at the chart, yes, we were in a downtrend for a while, but we did make a higher high, two higher highs in fact, and we're currently making a lower low. So we are neither in a uptrend and we're not really in a downtrend. So we can't really trade with a bias for that reason. And I actually like those kind of situations because I can really focus on what's been happening recently, and it does tend to simplify things. And recently, the trend has been down. We have been going down non-stop for the past 2 months on natural gas. It's been almost all red for 2 months. And one thing that I noticed on this chart is actually natural gas never goes down for more than 2 months straight. And that may sound simple, but I'm going to show you exactly what I'm talking about. So we're going to go from here, from the top here to the bottom here, and this was actually 27 days of downtrend on the daily chart. Now, obviously, it was a lot more intense, but in the duration aspect, it was only 27 days. And then we did have a counter rally right there. Same thing here, we have 29 days of correction on the daily chart. Same thing here, we have 38 days. And more recently, we do have this downtrend here, where it was, again, 25 days of downtrend. Now, the downtrend that we've seen most recently has actually been 65 days. So this is much longer than any other downtrends that we've seen in the past. So in other words, it is very likely that we do see a counter rally like we saw here, like we saw here, like we saw here, that is extremely tradable on this time frame. Now, it may seem simple to predict a potential counter rally just based off of the length of the downtrend that we've been in. But this is the type of simple analysis you can make on a chart by determining how probable a potential counter rally is just with the length of time. Now, obviously, this is just one slightly original factor that I'm considering in with a lot of different things that I'm going to talk about in this video. Just like the fact that we are actually coming down to a nice support level right here. So this is a support level we created here in July-August 2019, and we actually just bounced off of that recently, and this definitely does make it a likely bounce location for a potential counter rally, especially after 2 months downtrend. Now, obviously, that doesn't mean that we have to reverse off of it on the penny. In fact, natural gas does often make small bear traps, especially when everyone is looking at a level, which I can guarantee you everyone is looking at this level. We could definitely break this level temporarily, squeeze some shorts as we go back above and fuel the rally to a nice potential resistance level. Now I'm going to clear the chart and talk about some potential patterns that we see on the daily chart here, and then some potential targets to trade if we do see a bounce in natural gas. So this recent downtrend to me looks a lot like a nice little wedge pattern. From the top here, we do have a whipsaw signal here and a downtrend that goes all the way down to this support level, and a nice price contraction line here that shows the fact that we're narrowing down all the way to the support level. And natural gas does tend to make a lot of these bearish wedges. You can see right here. Now I'm going to quickly show you a small example of a wedge you'll see on natural gas right here, with this top here going down again with a whipsaw signal here to the same support level and the price contraction line you see here, and it broke and led to a nice counter rally after a big bearish trend. We actually managed to trade this counter rally, and you'll see that the measured target is actually very simple to use on wedges. You just take the base of the wedge, take the measured length, and from the break you measure out the potential target, and that was our target zone at this resistance level, and we did make some profit on this trade on this channel. It did go on to make higher returns than we traded, but this is obviously part of technical analysis. Now what's interesting about this wedge is that you also have RSI divergence here. You can see the RSI starting to go up while the price clearly continues to go down, and that's what you call RSI divergence. And when you have that with a wedge pattern, it does indicate a potential change in trend, and that's exactly what happened. And funnily enough, we are seeing exactly the same thing right here. We're seeing the price to continuing on down, with the RSI starting to recover, going up, especially at a support level. This is a huge sign that we could potentially break this downtrend line, break this resistance level, and send us flying all the way to these potential targets. And in fact, let's talk about the potential targets. I'm going to use the fib retracements. I love to use that with when determining targets. I first put on the resistance levels, as you see right there, and then I use fib retracements to determine how likely they are in the scenario where this is just a counter rally. So definitely you can see the 38% Fibonacci is a very likely bounce target, and the 61% is definitely aligned with this $2.5 support level, which is a huge support level on natural gas going back years and years. This $2.5 support is definitely something that we've bounced off of in the price history of natural gas. So again, this is another likely bounce target. So 2.5 and 2.34 are potential bounce targets. And when I say potential, I do mean it. This trade would only be valid if we start breaking this downtrend line, and if we start breaking this resistance level. So we do need to break both of them at the same time with a nice impulsive move to have the buy signal to potentially take us all the way to these two targets. So that would look something like this: a nice swift move up, and then a nice double rally all the way to the next support level, resistance level, I mean. Now I do have a third potential target aligned right here, and that is simply because of the MACD. You can see the MACD swings up and down. You can see it swings up and down with the price. And recently it has gone down with the price, and it's starting to potentially turn around. So if we have that break of trend line and start seeing a counter rally, it could start swinging up like it did here. and definitely potentially take us all the way to the $2.63 level right here. So this is about all I wanted to say in this video. I hope you guys enjoyed. If you did, make sure to like and subscribe. It does help me out a lot. In the meantime, good luck on your trading and see you next time.